Well, China over the years, over recent years, has become Africa's largest trading partner. There's been a great deal of financial engagement in Africa. But in terms of direct investments, China is not the biggest investor. In fact, the United States and the United Kingdom are the largest. But in terms of loans, China is probably the largest lender to Africa. And herein lies the worries about loan sustainability. And of course, there is a perception that China businesses, corporation, and government programs, they're focusing on the resources in Africa without bringing the employment benefits to the African people, and with less than perfect regard for the environment, and least of all, and most of all, without regard to the kind of corruption and corporate governance issues. But I think that China's been learning a great deal since its engagement. If you can look at President Xi's remarks, it's more focused on the kind of making sure that the programs bring real benefits to the African people. And of course, is starting to think about joint projects with other countries and indeed with the United Nations in certain cases as regards to sustainability and environment. So I think that there is a lot of issues to be addressed. But Africa, being a young nation, is a large rising middle class. In fact, if you look at the economy, the internal consumption has been growing by double digits in recent years, something over 15% a year. So the kind of consumption market for the rising middle class in Africa is huge. And of course, because of the young demographics, Africa is going to be the world's youngest workforce over the next few decades. And so that the China footprint, China's investments, China's loans, and joint projects with Chinese companies taking advantage, of course, of the market in China is a huge issue.
Yes. You mentioned that China is distributing loans among many countries in Africa, and some analysts have expressed concerns about a so-called debt trap that these countries might fall into. Sri Lanka has paid a heavy price for being heavily indebted to China, ceding control of a key port in the country. Should countries in Africa be worried about falling into this so-called Chinese debt trap?
Well, there's a great deal of concerns. As I said, one of them is, of course, to say China's engagement, because it's all over Africa. It's a new form of colonialism, and China's influence and dominance in many sectors are beginning to cause alarm bells. But nevertheless, China's investment in infrastructure has brought about the most dramatic change in sub-Saharan Africa's economies, and has been instrumental in enabling the various poor countries to grow their economies, because capacity building is very important. You need more roads, you need more utility power stations, you need highways, you need bridges, you need railways to bring the produce to the market. Now, Africa, of course, is the world's largest untapped food still relatively untapped food basket. But the problem is that a lot of the variable arable land is out of nowhere. I mean, how do the farmers there in those very remote places succeed in bringing their produce to the markets? So you need infrastructure. And of course, to grow the economy, you need education, you need hospitals, and China's state-directed kind of engagement is unique in the sense that they can put the whole package together, whereas purely commercial investments, they only look at the bottom line as paying scant regard to a lot of these capacity enabling projects. But as I said, there is a lot of concerns about China's engagement. Debt sustainability is the main thing. A lot of these countries have been borrowing, but as commodity prices collapse, their ability to repay is much more restricted. Another problem is that a lot of these projects are focusing on resources and even on some manufacturing in special economic zones in Africa. But nevertheless, only very, very few countries in Africa succeed in diversifying the economies. It's easier said than done, diversifying from resources, but how are you going to do it? Only very few can succeed in looking at the so-called linkage industries. Now, linkage industries are those industries which can get a spin-off from the kind of profits from resources. For example, in Botswana, they managed to grow their diamond industry, a diamond cutting industry, so that Botswana has now become the world's one of the world leading diamond cutters. So that's a form of diversification. But only very, very few African countries succeed to do that.
Interesting.
And most of them still focus on
I'm sorry to interrupt,
resources.
Andrew Lung. We will have to leave it there. But we do thank you for your analysis.